Hello, everyone. Welcome to the market update for Tuesday, September the 20th. As you can see on the slide here, if you have any questions during the week or any questions I don't get to in the live class, make sure you send those to jerry@traderspro.com. Let's get started. Kind of a whipsawing market over the last couple trading sessions. Market really looked like it was going to rally a little bit after Friday's move and yesterday's move. But today it's just reminding us just how weak things are, and that although there's still always, because we're in a little bit of an oversold condition, we could bounce a little bit. The main trend direction is still down. We're still likely to continue to move down, and we're probably very likely to retest or probably exceed those June lows. We'll take a look at that, the charts here in just a second. But before we do that, go over the direction alerts here. Again, we kind of skip over this all the time, but that's because this long-term signal does not change very often. We're not only in a bear market, we're in the far left side of that bear market box, which means that we're in kind of an extended bear market now, and at some point it could start to work its way back up towards a bull market. But as I keep pointing out over the last several months, there's some things that we're looking for to kind of signal when that's more likely. One of those would be that we want to see kind of that panic sell-off that we still haven't seen yet. And we'll see if that ends up taking place. All right. The momentum is getting into the oversold area. We're not in the extreme box yet, but so what this tells us is that we could, in the near term, sell off a little bit more before becoming oversold. But it doesn't necessarily have to do that. We could rally a little bit in the market and move us back towards the middle here. Again, this is not really telling us a whole lot as to what to prepare for in the near term over the next couple of days. Just showing that we're getting kind of close to that extreme, the breadth extreme. Again, breadth indicator not an extreme either. One thing I do want to point out, coming back up here, or let's look at the sentiment. Sentiment is still really high. We keep talking about this, and I'm getting to the point now where I'm seeing some of these things taking place in the market. Bad news coming out in the market. The market just kind of keeps shaking it off and shaking it off. The sentiment indicators remain so high that I'm leaning more and more towards we're going to get a really ugly sell-off here pretty soon, and I'm starting to believe that this market could have a massive move down to really shake it up, because it's just not. It's just kind of in a state of limbo right now. It's fear. There's fear in the market. I'm not saying there isn't fear. The VIX has moved up a little bit and is getting close to 30, but there's just no concern that things could get uglier. And we've had such a huge bullish run, one of the longest bullish runs in the history of markets. Happened from the financial collapse in 2008, that low, all the way up to the market high, which was basically at the end of the year last year, beginning of this year. And we really haven't corrected much of that. We've looked at some of those long-term charts. I'm not going to pull up the long-term charts today, but we've looked at that in the past. We'll look at them again in the future. Again, I just recently went through those, though, and I wasn't planning on including those in today's class, but you're free to go ahead and look at those. But you can see that in that context, if you look at that time period, we really haven't pulled back that much. And with these sentiment indicators remaining relatively high like this, something's got to bring that down. Something's got to bring down that thought process that this is just temporary, that the bull market is going to come back immediately, that rates are going to suddenly start coming down, and we're going to get the free money again, and the market's going to get flooded with money again. It's going to be like the COVID bottom again, where they're going to cut us free checks again and things like that. I think there's just that belief that we're going to get back to that, and it's really illustrated when you look at this chart right here. You can see here's our momentum and breadth indicators all the way down here, and look at sentiment. Sentiment is just stuck up in this range right here. It's stuck up in this high range right here, and yet the market has come down quite a bit. It's just baffling to me that it's remained that elevated, and in my mind, it means that we're probably building towards something much bigger to the downside. Now, having said that, I'm not trying to predict anything. I'm just saying that something is off. You'll hear me do this from time to time, where I'll make some of these bold comments, but the discipline is you stick to what you're seeing right in front of you. What is the trend right now? How is the market behaving right now? You want to stay focused on that, because again, I'm not trying to predict some end of the world type event taking place. And that's definitely not why, even with this, I'm not trying to predict something like that. But it just, when you look at, I've studied history, I've studied the market history, I've studied human nature, and just something seems off here, that there isn't more concern. And I'm not saying there isn't a level of concern, but there isn't a lot more concern that things could get a lot worse. And there's a natural tendency for traders to be bullish, especially, when you look at the history over the last 30 or 40 years. The markets have relentlessly gone up, and these pullback, even the financial collapse was temporary. It lasted a few months, and then the market started rallying again off of that. The COVID collapse was just a couple months, and then we started to rally off of that. And so it's human nature just to assume that this drop is just going to last a couple months, and then we're going to be off and running again. That's just been the case with the last several big market sell-offs that have taken place. And so I get that people are leaning more towards that taking place, but that makes me, as a contrarian, that makes me wonder if this time around there's going to be a little bit more damage that's going to be done to the market. We'll see. But I thought that was interesting when I pulled up that chart, just to see how dramatic that difference was, with sentiment elevated up here and market momentum and market breadth all the way down here. That's just not normal. You can see all over the rest of the chart. When the markets have dropped, you see sentiment come down as well, and it's just remaining elevated up there. Something's got to bring it down. Buy-sell ratios are wide, but we have seen them a little bit more extreme than this before. So, to say they couldn't drop a little bit further or widen a little bit further wouldn't be too much to ask. But the fact that we are this wide apart would indicate that we are getting into a little bit of an oversold condition based off of that. And then this sentiment indicator, we're not quite in the middle, but we're not at the extreme range down here. So all these are indicating that, indicating we could go either way as far as the overbought, oversold conditions are concerned. Let's take a look at the charts here, and you can see kind of the whipsaw that we've been in over the last couple of trading days. At least if this is going to cooperate with me. This is weird because, I've been I use the software all the time, and I never run into any problems. And it seems like the last few market updates I've been doing, that I've had some sort of issue, whether it's with GoToWebinar or my internet service, and now with the site itself. Let's see if I can fix that here. All right, here we go. All right, you can see one of the things I pointed out in the last update was that if we were to break below this 389 level right here, that was going to be very bearish. We did, but what happened was we opened lower than that, and then we ended up closing a little bit higher than where we opened. This was Friday's move right here. So we were down, but we ended up managing to close higher than where we opened. That tends to be a little bit of a subtle bullish reversal type behavior. Now, it wasn't the strongest. We didn't close at the highs of the day. We off the highs of the day a little bit, at least on some of the indexes. Some of the individual stocks too that were forming a similar pattern. Then on Monday, we opened lower down here. We opened near the lows of Friday, and then managed to come roaring back and closed at the highs of the day, which tends to be also a pretty bullish type of price action. It tried to open weaker, managed to come all the way back, filled in this gap right here that was created on that gap down on Friday. Looked like we should get at least some follow through to that, and yet what happened today is we gapped down, and then now we're trading to new lows. So the bottom line is that what this is showing me is that these attempted rallies just aren't going to hold. A lot of them are created by short covering. There is buying taking place, but it's not buying with the belief that things are going to go higher, or that you want to own a stock for it to go higher. A lot of the buying is short sellers, people that are short of the stock that are buying back those shares to close out those short positions. You sell first when you're shorting a stock, then you hope the stock goes down, then you buy those shares back at a lower price, and you close out your trade. And so that buying isn't buying with this belief that the markets are going to rally for 3 weeks or 2 months. It's just to get out of that short position. And so these buying bursts don't last very long. They unless there's new buying that's coming up from people that believe that the stock is going to go higher over time, then they tend to fizzle out. But it's just a reminder of the market mood and the market behavior. The market is acting like it wants to go lower. Now, we already knew that. That's what we've been talking about. And if all you want to do is just look at basic trend analysis, we can see it in just about every chart that we pull up. But if you go to a longer term chart, let me go to just a 1 year chart here. Let's see if I can do it with a 1 year chart. You can see that you clearly have, not only have your lower highs, but you follow a trend line right through here, where every time it gets to that line, it fails, it rolls over. But you've got lower lows on this side right here, where you're going so you're going to lower highs, lower lows. So the larger trend is still down. We should still continue to move down until this pattern changes again. And we're not trying to predict when that's going to change, or why it should change right here, or we're not getting into any of that kind of stuff, because I don't see any reason why it should change right here. But until it starts acting like an uptrend, we're going to assume that this trend is going to continue. But even in the near term, you can see on a smaller scale, you can see the stair step down. We focused on this recently in our updates. You can see, let's zoom back into that 6-month chart so you can see that. Again, clearly lower highs, lower lows. We had this rally right here that, almost broke above this area right here that I pointed out was pretty critical a couple weeks ago. It failed, now we went to a lower low, which we said this should continue to a lower low. Now, again, there's still room for these bounces in here. This was a couple days bounce right here before it rolled over. Maybe that was all the bounce we could muster over those couple days right there. But that's what's tough, is in a situation right here, and this is why it's impossible to know exactly what the market's going to do particularly over the day or two, is because now that we're breaking below this low today, and we just barely started to break below it as class started, we could have a bigger move down today and tomorrow, or it could move down a little bit and then bounce for a few days and then drop. But ultimately, that trend is going down, and so we got to just view all of these little rallies as just rallies within the downtrend. And until that changes, until that pattern changes, we're going to assume that and the bottom line is that the market is acting like it wants to go down, and that's one of the purposes of this process we go through in these updates, is we want to determine what the market conditions are so we can determine what types of trades we want to do. Now, I will tell you, I felt like we could bounce a little bit and rally a little bit off of that price action, and so I had a little bit of more of a bullish market mood just yesterday as I was going through my analysis. And I actually made some portfolio trades, which at this point I think I'm going to stick with. But I'll point those out here a little bit later in the class, what I did, and you could take a look at that and make your own decisions on what you want to do. But again, today's reversal has changed a little bit of, I no longer believe, at least, that this price action from the last 2 days is going to lead to a little bit to a stronger rally for a couple days. It just changed that today, and so I've immediately turned back to being bearish again. The other indexes are looking the same. The Dow, NASDAQ 100. NASDAQ 100 is holding up a little bit better. It hasn't dropped below that low yet. We'll keep an eye on that. It doesn't, and the Russell's actually right there too. It hasn't dropped below it, but it looks like it's on its way to breaking below that low, particularly since the S&P already did it. S&P and Dow both did it. Bonds, it was interesting about bonds. The TLT right here is that we have gone lower again. We're still in this downtrend in bonds. But if you look at the individual candles, you can see it's trying to fight the drop a little bit. Now, it's not winning, and so that's something to point out, is that it's fighting back, but it's not winning. But look at this right here. Look at where we opened this day right here. We opened down here. We managed to close higher than where we opened, okay? But we did put in that new low right there. Now here, we tried to rally up a couple days right here, but that failed. But look at each of these days, even though we're dropping lower, here's where we opened. We traded this high right here, came all the way back down. Here we opened a flat, tried to rally up right here, but they came back down. And then today we gapped down here, but we're trying to rally again. So it's trying to rally, but it's still ending up putting in lower lows. So it's not gaining any traction. And a lot of times, especially since there's been a number of attempts there to rally off of that, at some point, usually that ends up failing, and you end up just kind of having a bigger drop. But there again, you had a couple days here where it managed to rally a little bit off of it. Can you get the same thing where it managed to have a little bit of a bounce? Here's a little bit of a 2-day bounce before it collapsed again. We'll see. Overall, the bonds have been trending down for so long. They are getting into a longer-term oversold condition where we should start to see them rally at some point. But again, we're not seeing it yet. Until we do, we're assuming it's going to continue in this trend. Now, what are some things you could look for? Well, one of the most obvious to me, just looking at the chart here, is you could just draw a trend line down and connect these highs right here. That's a pretty straight line for free drawing. I'm going to give myself a little bit of a pat on the back for that one. If we can break above that line, again, it doesn't mean that a trend reversal is underway, but that would be one of the first signals that that downtrend could be reversing. And what you'd like to see is not only break that trend line, but break it in a definitive move, meaning an impulsive move up, where it moves up sharply for a few days in a row and breaks that trend line. I talk about how stocks tend to alternate between impulsive and corrective moves, and then when you change trend direction, very often you have back-to-back impulsive moves in the opposite direction. So you get impulsive down, impulsive up. If that impulsive up move can break the downtrend line, so you get an impulsive up right here, and then you get kind of a corrective move, particularly if it's a corrective move back down to retest the bottom side of that trend line.